Good morning, everybody. Welcome to the F.A.C.E show. Here we are, Tuesday, the 6th of January, second big trading day of the year, and things are ticking over once again in markets. Morning, Steve. Morning, Kay. How's it all going?
Morning, guys. All good, mate?
Cool. I know Steve's there somewhere in the background tinkering around with bits and bobs, as he likes to do. Right, so where are we this morning? So looking like I'd like to say the dollar's looking a little
Good morning, mate.
Hello, mate. Depends on really what you're looking at as far as the buck is concerned. Taking a look at things like the euro, we're just hovering around this 117 level. Let me just get that zoomed in a little bit better. Yeah, not too much action going on here. We've seen a little bit of euro coming off. Kay, we just still in a bit of the same old New Year flows a bit.
Yeah, and as I was saying earlier today, it seems like we're in a bit of a what's next mode now on the markets. We had the bit of a dollar buying first thing yesterday, then selling, and now we're back in the middle, especially in the euro dollar. We've had those German numbers coming out on inflation, which were quite a bit lower, putting a bit of a drag on it, I guess. The States came out this morning showing the lower data. The pan-German number just coming out, and it's actually quite, it's 1.8, which is even below the 2% expecting, coming down from 2.3. HICP also six tenths lower, down to 2%. And I was already saying, I mean, the people who were thinking, or especially the German members of the ECB, thinking that they may need to hike rates, I think they have to postpone that thought a little bit. When you look at the CPI data coming out this morning, also the French ones were like 7-month low. It's not something where we could expect the ECB to hike rates, but it's not it as it was expected, that coming off a bit. I don't think it will change much for the ECB either. So we're in that wait and see mode. As I said, we had this drop in the dollar. It's gaining back a little bit. We've seen this kind of scenario yesterday as well, just right going into F.A.C.E. But yeah, I mean, wait and see. I don't think there's any big decisions to be made right here and now on the dollar.
Yeah, there's certainly nothing from that data, whether it's the French inflation, the PMIs, that screams that people should be buying the euro. Pretty much all of them coming in a little bit softer. Spain, pretty much the main exception there in the PMIs. Nicely decent jump, 57.1. But something else just looking a bit softer. So, yeah, it's, we're off, 30 pips, 40 pips today. So that's not a great deal to shake a stick at. But yeah, what the US is going to do when they open up, and they're coming in now, obviously, is going to be important, because we did see a bit of dollar weakness yesterday. Now it's turned a dollar buying. It's a bit two-way at the moment. So I'm not expecting anything really massive to come from this. We had some UK numbers out as well. Services a little bit better, missing expectations, but better than last month. As you can see there, the German CPI numbers, final confirmation there of their flash numbers after those regional numbers. So again, nothing that is going to get the ECB too excited. But could we, if this vein of lower inflation does start to pick up a bit, might that shift the focus the other way to perhaps ECB getting back on the easing wagon again?
We all know they only have the price stability mandate, but from their own comments, and we know that they are going to be looking at growth as well. So we are going to have to make the balance between what's happening on the growth side of things and inflation, really. We know that growth has been anemic for a long while. So if that stays that way, I think it may actually shift the balance just a little bit. But all of them basically having now declared that they are on hold, it's going to take more of the same. If the December number in inflation is just stable, holding around there on the January number, I don't think that the ECB will change much from their holding pattern right now.
No, I think I can agree with that. The pound still looking a bit perky. It had a very decent rally yesterday, but some of the air's coming out of that tyres as well. It's been noted that we have seen a bit of buying interest around the fixes around yesterday afternoon as well. There's been no data behind it, but we've seen, as I said, the pound looking a bit more positive latter part of last year coming into this year. Again, is this just a bit of pre-positioning? I mean, we've had euro sterling, which has got down to this zone around here, but it seems to have held for now on a first test. But as you can see, they're quite a significant move for this pair. Can this pound rally continue, or again, are we just going to see a
I
bit of New Year motion?
Yeah, I was looking at what's happened on equity markets between the US and non US based equity markets, and I have the impression that yesterday's flows, especially on the sterling, were a bit of a maybe a rebalancing going on, but it could be just start of the year flows as well, because we are printing an all-time high on the FTSE, we're printing an all-time high on the DAX. Printing an all-time high in the Nikkei, but the US equities didn't follow the move. So I guess some of those flows that we saw yesterday were a bit linked to the exchange effect of it. Funds, zero FX funds also needing to balance a bit, or buying some sterling to invest in the FTSE. When now we're looking at that one, so I think those flows may have been linked to that, and perhaps even the euro dollar flows that we saw later in the day around our fixing and etc. May have linked to that. So it's an open question whether it will continue if they continue to really buy the non-US markets, although we've seen the New Yorkers walking in trying to buy a little bit of their own equities as well. We may see a bit more of those flows, but if they come to an end, I wouldn't be surprised if stuff like euro sterling at least stabilizes. I've identified there's a very big 86 and a quarter on the euro sterling, and I think for as long as that holds, I I started very shyly to buy into it again, just in the anticipation those flows may dry up sooner or later.
Yeah, I'm keeping a beady eye down here in the low 86s as well. That's why I had a go last time. Well, I'm still long a bit from down here. I'm happy to give that a go if we see that there. But yeah, we're just holding this zone at the moment. So do you think again, putting it into the early year basket, maybe some investor jitters around US stocks, obviously what Trump's doing at the moment, Venezuela and the like, and AI stocks and everything going on there, chip stocks, they are a big driver of what's going on over there. Do you think that, I'm not going to say run out of puff, but maybe the risk parameters around those
Mm.
companies, that sector is going to see some flows into, other jurisdictions like
But
the
it's enough to question the funding needs, etc. Because there's been a big dive into them in 2025. But if the market questions um, the huge amounts to be invested, and whether they are going to get all of them, and also being potentially a bit inflation, a driver of inflation, it may be that is one of the explanations why the market is diversifying a little bit from US stocks into other stocks. It is all very possible. Just questioning uh, the huge amounts may push some investors to become a little cautious, and then that as a result is pushing non-US markets up a little bit. Yeah.
Yeah, no, I mean, the S&P's looking very interesting. You know, we had another little look up towards this, 69.20s area. It was sort of the prior tops. We hit it again. We had a break, tried to hold it, then we're under, then we're holding it again. We're not far off it. Do you think if we break it this time and it looks like it's building, we're off and running again?
Could be, man. Yeah, could be. So it's like the one pushing the other, right? Once we have seen that bit of diversification, we may start to look at U.S. equities again, especially if we get this week, if we get those jobs data, yeah, and if they will not be bad, or even slightly good. I've seen some expectations. They are not hugely out of the ballpark of the expectations of 50, 60,000 jobs creation, but some of them leaning towards the 70. I think Goldman, Wells Fargo, they're looking at slightly better data potentially, if that would really be the case, and there is not too much of a worry in the immediate to have on the jobs front. Yeah, I can see the US indices starting to climb again. Are we going to get it before the release of the data? I don't know. Maybe just a bit of flows here and there, but the real test will be coming on those jobs numbers, I guess.
Yeah, yeah, I agree with that. We've definitely got a bit of support. This 68, whatever, 85, 90 area. Again, it was a former high on the way up or a little stall point. It's becoming a bit of level. So you've got a decent range to trade: 68, 80s, 69, 20s. I think if you're going to get a break either side of that, you might want to look at going with that, depending on your viewpoint. But that definitely looks like the boundaries that we're sitting in at the moment, at least intraday. So keep an eye
But
on
we are
that.
consolidating at high levels.
Yeah,
We
yeah,
we had we had the year end, let's say, people taking profit, etc. But we are consolidating at very high levels. We are so close to all-time highs. I mean,
yeah.
it just looks like we're going to go for another push unless we get like very bad data from the jobs front in the US.
Yeah, but then on the other side, if we do break above this area, if we can't get through these prior highs, pull up short, that potentially could mean we're going to see a bit of a steeper pullback, maybe getting down to these sort of levels as low 68s, something like that. So I think there's still a bit of two-way risk for this. It's not just a bite and shut your eyes like it has been, in the early part of last year. We got into this up business, and then we had a bit more action going both ways. So yeah, I wouldn't be screaming into a break buy up here unless we're clearing these highs and finding decent support against this area. Now, one thing I wanted to talk about, obviously, we've still got this Venezuela stuff going on. Trump talking about how he's going to put in firms into Venezuela, particularly on the US oil firms getting in, and how they're going to be reimbursed, whether they're paid directly for their costs or whether they take it as profits. I was going to look at Exxon earlier because that's looking a bit perky as well. And I think we're seeing the same in pretty much all the US oil complex at the moment. It's an opportunity potentially for some of these firms. Maybe we're going to see a renewed drive in the stock markets that aren't the Mag 7, that
Mm,
aren't AI and chip stocks.
mm.
We're going to get back to the old school, the Oilers, if we call them that.
Especially if the Trump administration is going to subsidize the US oil companies to revamp the energy infrastructure as he touted yesterday. I mean, that would be a big push behind those companies, and potentially, as you say, drive people back into the more traditional stocks. And then you think about, obviously, the oil companies, because they are directly beneficiary from it, but also even infrastructure, and construction, etc. All those companies who are linked to them, I don't know, the Caterpillars, etc. of this world, may also do very well on the back of this.
Yeah, but it's there's almost a double-edged sword to this because everyone's now a Venezuela expert, but reading the basics, it's not a simple task getting some of this stuff out the ground due to
No.
terrain and whatever. There's a higher cost involved in per barrel cost, if you like, for producing oil there. So even if they get it out the ground, it's obviously going to bring more to market, but it's going to cost more to get it out, even while the extra production may see oil prices coming lower. So is there a margin play there that
Waves. It's going to
doesn't
come in waves, right? I mean,
yeah
we can see the positives immediately if the US government is going to sponsor them. Then you're going to go into, okay, are they going to succeed? And it's going to take time as well. All of those things are going to take quite a bit of time. It's not as if they are already over there to start drilling, right? So it's going to take time as well. So it's going to come in waves, I think. And yeah, we don't know how much they are going to be able to pump out of the ground to bring to market, and that as well is going to take time, right? Um, yeah, it's all very much the question if it's going to be cheaper or how much cheaper or how much more expensive it is going to be. And then you look back if the US sponsors the whole, or not the whole thing, but if they subsidize parts of it, how is the US fiscal and financial situation going to look if they spend more money? Where are they going to get the money from, right? So there's a lot of new questions arising from this whole scenario.
Yeah, exactly. And so I think if you're looking at trading this sort of thing, I think your short term bang for your buck is looking at oil stocks, ETFs, those companies getting involved if they're getting all their costs covered by Trump. It's a bit of a green light for them. But on the oil side of things, it's going to be a long drawn out affair. 5, 10, 20 years maybe. We're talking really long term stuff going on here, and who knows what happens next week with him. Okay, I want to move on to gold. I don't know if you want to grab the screen for that, because I know you
Oh.
keep things more up to date than
Um,
moi.
I can.
Or,
Yeah, I've been showing it this morning as well. Let me see. Where is my screen here? Yeah, here we go. Um, yeah, so that thing, as I was expecting yesterday, took off after the Venezuela thing. Um, and now we are like above this little zone here where we stopped earlier, and it's trying to hold. We had a little bit of a retest there, and it's trying to hold. We're pushing again against the 44.70. This thing is really, I reckon, at least when you look at the metals, when you look at how geopols are going, when you look at things, if this because now this talks about whatever happens, it's even the Venezuelan stuff, if you look further down the line, could be also inflationary. It is going to, it should be supporting the metals. And then if you look at the geopolitical risk, because we haven't really heard yet firm responses. We had some lines here and there, but the firm responses to what Trump did in Venezuela from the other actors over there on the ground, China, Russia, Iran, then mainly, we haven't heard from them yet. So that could somewhere that uncertainty could give another push, right? Now, as I've been saying as well, I think the market, especially today, maybe in a bit of a wait and see mode because we are also going into data for the rest of the week. So I'm not sure if we can get straight away to back to all-time highs, but at least what happened here, I think will or should at least have an effect of we're going to find bits on dips again, and the fact that also again we have seen in the Asian session that has been holding pretty well, okay, and being pushing up also tells us that the Asians are still not letting this go, and therefore I think we could actually see a little bit of a continued push higher, closer to 4,500. I don't know whether we are going to go straight through it, but for sure, I'm in the camp of dips that should see buyers. And if you look at what's happening on silver as well, it's the same scenario. Technically, it held really well. We even have a bit of a trend line here, but especially above this zone here that I've already been mentioning, we're trading back around this 78 three quarters. Also there, I mean, the scenario hasn't changed. We have been consolidating violently into year end, but if you look at even on the short term, already now the short term support zone is already holding, and we're pushing through. Bit of similar scenario there. I think any setbacks now, maybe already even into these 75 and a half should see buyers. I'm not a specialist on platinum or palladium, but palladium yesterday was absolutely rocketing higher as well. I think it at one stage it was up like 7-8% or so. I don't know how it evolved since then, but yeah, that was. I think they are still going to remain bid, especially if we see those kind of setbacks. I'm not even sure we can get far below 75 right here and now on silver, but those setbacks, they will probably still see buyers come out of the woods. You were looking at that euro sterling, but I just wanted to highlight this again, that importance of that 86 and a quarter. Okay, so we had this into the whole month and a half of setbacks. Yesterday we had this a pretty decent acceleration as well. Went a bit below the 78.6. This is 78.6 of what happened between August and November. So we kind of went slightly below. It's a daily chart, right? So this is 10 pips, but okay, went slightly below. But then really I wanted to draw the attention to what's happening around these 86 and a quarter. And you go all the way back even to 2023, it's always been an area where the market had interest, whether it's a top, whether it's a top here, whether it's closer to home, bottoms around here. I think this one is really, and it's the last bottom as well, and the last two as well. I think it's really important that 86 and a quarter. And as I was saying this morning on the flow show, and we already touched upon it yesterday as well, Ryan, is that you look at this, and then you look at the fiscal and even the political situation as well in the UK. We tend to, and I think you agree upon that as well. We tend to think that, okay, we have seen this setback. We had the budget over and out, market shorts turning, buying it all back. It lasted a while. Then we had the year end coming in. Then we had those yesterday's flows. But sooner or later, unless we get economic data defying all the laws of gravity in the UK, but sooner or later, some things will start to pop up again, right?
Yeah, it's how long's a piece of string and how deep are our pockets until that happens.
Yeah, exactly. So really, I think this if we would get a visit in this 86 and a quarter, there's going to be a very interesting zone to monitor. Right. What else are we looking at
I was going to
today?
have a look at the Aussie because that's still trucking
Yeah,
along nicely.
yeah, it's doing well. That 66.60 is really shaping up as a very good level. Yesterday, actually, right at the start of F.A.C.E, I think we had a bit of a I think a bit of a move lower, and then it jumped again. Um, but we are struggling, or we are hesitating, let's put it that way, to get through 67.25.30, which is the level. It went slightly above in Asia, and then we had a bit of take profit selling. It's the level, right? And I really think it does look overall um, even not that move here, but even since September, we are like going up and down, but consolidating the broad consolidation above critical levels. And then here we are already finding support, as I said, on that 66.60, and we are here now. That retaken, and I suspect it may, just because it's holding pretty well. And Aussie has been doing well. If you look at crosses, if you look at Aussie Kiwi, it's holding well. If you look at the Euro Aussie, it's feeling heavy as well. Any dollar weakness, and I think we may be around 68 and a quarter relatively quickly.
Yeah.
if we
You
see
got an
more.
Aussie Kiwi there because that's looking very interesting as well. Looking like we might have another upside break on the cards
Kiwi?
coming up. Aussie Kiwi.
Oh, Aussie Kiwi, absolutely. We're consolidating it at quite high levels here, and this is it's a bit the same picture as on the Aussie dollar, but with that difference that Aussie has a market higher interest rate than the Kiwi now, right? Kiwi is what, 1.75% or so. Aussie 3.6. It's the double. That for one.
Could
Aussie
be
has
going up if
whatever.
the market is to be believed,
Sorry.
and could be going high if the market is to be believed.
Yeah,
People
if the market
expecting
is to
cuts
be
next month.
believed, but again,
Hike.
I still want to see those two rate hikes from the RBA. The first test will come up very soon because we have Australian CPI coming out early morning for us next morning, and late for the people who follow us from the United States. Late in the evening, they will have the Australian CPI. So that may be another driver to potentially, if that remains sticky and the market continues to trade the argument that the RBA is going to remain hawkish, that could be the trigger to get back above this 116.35 and then move up at least into the 117s, right?
Do
It
you
could be
think they
really
could hike?
come again.
Do you think a hike is a strong possibility?
Um, from where I sit, I don't believe in the two hikes that the market is pricing in. But because I still think that central banks in general, taking apart, besides the Bank of Japan, which is on a different path, but I still think that central banks in general are not, they don't want to hike rates because global economies are still struggling with a lot of uncertainty. And I really, even if she's hawkish, even if Bullock is hawkish, could we get one? We could always get one. Could we get two? I still want to see it. I'm not a believer in the two rate hikes, but the market is trading the possibility. And
Yeah,
also, we still have not to forget, and that's been going on since the start of the tariffs, that Australia is on a lower tariff than most of the countries, right? So there is still, and also US was looking a bit at Australia to be a potential provider of rare earths as well. Also, Australia is not the biggest, but is still a producer of gold, and all of that. I think is keeping the Aussie on better bit than most of its peers. And I think that is still tradable at the start of this year. Okay, but I still want to see two hikes. I mean, I'm not sold on the idea. I'm still a bull on the Aussie. Don't misunderstand me, but I don't think that we will see two hikes, not in current scenario,
yeah.
unless we see very good growth in Australia.
Now, I know they've got to react to whatever conditions are, but wouldn't it be seen as a bit of a failure if they have to hike rates after wanting to get rates down like everyone else? I mean, having to, because there's already been a knock on the RBA, even the Bank of Canada, pricing in some hawkishness there. Is it this sort of thing? If we actually get a hike from the RBA, that will then start spreading to the others, and we'll get perhaps a shift to a more hawkish bias for even likes of the RBNZ, who have got rates all the way down and maybe face the prospect of then having to take them back up again.
Yeah.
Central banks would like to have rates sitting at a neutral level, whatever it is, for an extended period. They don't want to be having to go on a hike cycle again and
No.
then go on a cut cycle again.
Mm. Um, if the RBA could drag others higher, in the case of the RBNZ, it's possible because the RBNZ is a smaller economy. It's an economy that can flip around faster, and they may because they actually, if it goes up, they have a bit of room to maybe put them back at 2 or 2.5% even. But dragging the bigger ones along, I'm not sure. In the US, it's a bit of a limb. Okay. I mean, there's always the Trump and the replacement of Powell. That people expecting a yes man cutting rates further, etc. But there's a bit of they could have an issue with inflation over there. But is it going to make Fed hike? I don't know. They would hate to have to do it. ECB, I think, apart from the Germans and maybe Austria and Netherlands, perhaps, but those hawks could see it. But with the current picture that we have in the Europe, I don't think that ECB will be tempted to hike rates just because RBA is forced to hike rates. Would it be seen as a failure? Yeah, I mean, Bullock said something of the likes. I don't think the last RBA meeting, but the one before or in between, said that if inflation would start to peak again or to spike again, they would see she would see it as a failure to have to hike rates. So you're right in saying that it could be seen as a failure, but she's one of those when they will have to, she will. And but I don't see it as a trigger to force other central banks, maybe apart from RBNZ, to go and hike. No, and I not the major ones at least. Um, I'm seeing
Yeah.
Gordon asking a question there on the dollar cat ABC. Okay, I'm not trading those kind of things, Gordon, but um, I can see a way of dollar cat continuing higher. But of course, you have the dollar side of things, which for the time being is a bit, let's say, we don't know exactly what's going to happen there. But for dollar cat to push higher, I think we are going to need to, at least short term, need to hold this 137 and a quarter 40, mate. If it can't hold that, I don't. Then we are going to start to look at the wider picture again, and is it not going to destroy a bit of the positivity if we get back and hold back below 137 and a quarter? So for the next move to happen, we're going to have to start holding, and I think also not only in price but in time relatively quickly for it to continue to go. It's possible. Keep an eye on what's happening in the oil market. It could be down the line that the Canadians or the Canadian dollar is feeling more heat than the rest of the currencies, because if oil companies can dig the black stuff out of the ground in Venezuela, it may mean that they are becoming less reliant on Canada, and therefore the Canadian dollar could be a laggard versus other currencies. Yes, it could happen. Will it happen very soon? I'm leaving that in the I'm leaving that now for time to tell us what's going to happen. But at least for the short term, it better hold 137 and a quarter, I think. Back over to
Yeah.
you, Ryan.
Thanks very much, mate. I see Blake's in the house as well. Larry is in the house as well. He's our guest today. Larry, I've just tried promoting you.
He actually got promoted, so he's
Oh, he's
good.
there. Cool. Cool.
Yeah. Hey, before I bring in Larry, I just wanted to say, first of all, good morning to everybody out there. K-Man, Ryan, good to see you guys. I don't see Steve here, but I thought he might have been around at some point. So good morning, guys.
How you doing?
Yeah, mate.
Good.
Morning.
And I want to ask you guys really quick, and I want to talk dollars because I haven't heard what you guys had to say. But let's talk about yesterday's move really quick before I jump on with Larry. Yesterday we had the dollar, and I know you guys probably already talked about this, but it's like the first trading day of the year, and the real trading day, right? And the dollar index, rallied pretty sharply yesterday, and then we saw this massive reversal. It was post ISM, but I don't think it was ISM data that really did it. What do you guys think drove that dollar move that we saw yesterday?
Well,
Go on, Kay.
I was saying earlier, look at the non-US equity markets. What's happened there yesterday and the day before and even this morning? You got the DAX, the FTSE, Nikkei racing to all-time highs without the US markets following that move. It's trying to catch up a bit now, but I've got the impression, and it really filtered through in what we saw happening in the cable yesterday. We had those couple of legs of really good buying in sterling yesterday, which also drove the sterling crosses higher. I think there has been a bit of a shuffle around of between asset markets, equity markets from US into non-US, and I think that helped the dollar giving back, and the rest of the it's actually maybe the rest of the currencies doing the heavy lifting rather than the dollar. But I think the other reason why the dollar came off a little bit, and I've said it on the morning shows as well, a flow show yesterday. I wasn't really buying the fact that the market was buying dollars because of the Venezuelan thing. I
Yeah.
I can't see it as a as a short term. What happened in the medium term, I don't know. When they start digging stuff out of the ground in Venezuela, if they ever do. But I couldn't see it as a positive for the dollar yesterday. So yeah, I think the market tried one side and then had to give it up because the flows went the other side.
All right. Well, sloppy markets, guys, you know, somebody that's going to make sense of all this for us is Larry Tantarelli. So good to see you, Larry. How are you? It's been a long time. Happy New Year.
Blake, good morning. Happy New Year. Thanks for having me on today.
Yeah, Happy New Year to you. I'm gonna bring you on over, and I want to just say once again, Ryan came in. Thank you guys, Ryan. I know your kids were looking at some universities today. You had to go do that, and came in, you know, covered the flow show. If you guys are up in European hours, make sure you guys are actually listening to the flow show. I listen to it every day. I listen to the recording so I can get caught up real quickly. You know, there's a couple ways that I do that. I'll go on ForexAnalytix and I'll start reading through Live Squawk and I'll just see what has happened since I woke up. But I also sit there while I'm doing that. I'm listening to Ryan. I'm listening to K-Man. I'm getting up to speed because every market that we deal with is all interconnected. So thank you guys for keeping us all connected and all of us informed.
Cheers, Blake. Have a good interview.
All right.
Have a good one, mate. Have a good interview.
All right. Thanks, guys. All right, Larry. So now for the big event, we got Larry from Blue Chip Daily. Larry, it's been a long time since you and I have had some discussions. Way too long, by the way. Good to see you.
Good to see you too. Sorry, I don't have my camera on. I wasn't sure if we were on camera or not. So, but I'm here.
Wait. So is your hair not done today?
You know, that's what it is. I normally wake up an extra 10 seconds, you know, early to get my hair done, but yeah.
Well, as you guys can see, Larry doesn't have his hair done, or doesn't have hair to be done. But Larry, I love poking fun because I have a full head of hair, A, but B, because I'm very jealous. I've had my hair shaved twice in my life. Once was at boot camp. Once was when I went to Somalia in Africa in 1992. Both times I look really silly with no hair. So I'm always jealous of those guys that can pull it off like you do, man. You look like a stud. So it's always great.
Blake, I appreciate that.
So, hey, look, we can go one of two directions here. I can show some of the stocks that you want to see, or I can let you also take the charts and you can show them. So it's up to you. What would you?
Yeah, if you want,
do?
I'm fine doing a screen share. Do you want me to click on the screen share?
Yeah, let's do it. Let's do it.
Okay, it says someone else is sharing, so I'm going to send a request.
There we go.
And then let's see. So we'll do share. And here we go. Okay, so you can see my screen, right?
Yes, I can. I can see the FinViz screen right now. Yep.
Okay, so why don't I just let you, if you want to go ahead and, you know, start the interview, we'll just take the charts wherever you want to go.
All right. Well, first of all, Larry, let's start with the S&P. And I mean, I've been looking at the S&P with a very wary eye because we're at what I see as a 5-year channel resistance coming off of the COVID lows. And I know we're up against all-time highs. I know you're a big technician. But where do you see the broad markets right now? And are we going to go higher from here? Because my suspicion is if we go higher from here, we're going to get into a blow off top type of environment. And with that being said, we have the genetic makeup for that to happen, especially with an incoming Fed governor. Fed chair, excuse me, that could be more dovish, who could deliver us some more rate cuts. We have, a Supreme Court that could rule that, hey, the Trump administration was within their jurisdiction, and they can go with the Trump administration. The Supreme Court could on tariffs. You put those two things together, that puts us probably at least 10 to 15% higher in the S&P. So just with all that being said, where do you think we're at right now, and is that even possible?
So it's possible, and the key thing with me, Blake, as you know, I'm more of a trend follower per se. So what I tend to do is I follow the trends, I follow the moving averages, and in the S&P, and it's the same thing in the triple Q. If you look at the chart, we've got a confirmed long-term uptrend. So just here, we're over 5 rising daily moving averages. And really the key thing I look at the 50-day moving average, and I look at the slope. And the slope of the 50-day is higher. Also, the 200-day moving average is higher. So the trend right now in the S&P is up. I do expect that we're going to drift higher over the course of the year. It looks like the Fed's going to cut interest rates. But with that being said, historically, there's usually one 10% pullback every year in the S&P 500. So, at some point, I just think we need to build into our expectations that while the overall trend is up, at any time, you can get some pullback, you can get some volatility. We've got the payrolls number on Friday, and I really think it's the incoming economic data that's going to determine, any shorter term volatility.
Yeah, I mean, the whole market's focused on the labor data, but we have ADP tomorrow. We have ISM services also tomorrow. JOLTS jobs openings, weekly unemployment claims. I know you tend to be more of a trend and technician, and even TT in our chat said, Larry, the man that made me understand and respect the importance of trends and moving averages. So with that being said, I know you're looking at the data. Does it matter to the trends that you're looking at so much, or do you just look for how does the market react, and do they respect the trends or the moving averages that you're currently viewing? Where are you at as far as that goes?
So I look at the trends overall, but I definitely, I don't do it in a vacuum. So I pay attention to potential volatility events. So, over the weekend, we had the news out of Venezuela, but the market so far has worked higher off of that. Energy's been strong. But yeah, I mean, we've got to pay attention to how the payrolls number comes in, and the incoming economic data. It is important. So we've got CPI, I think, next week.
Yeah.
And the market has been very choppy short term based on the data. So if for some reason we got a hot CPI number where anything that would put any any doubt on a Fed rate cut, that could create some volatility. You've got big banks start to report earnings next week. So JP Morgan, Citigroup, Goldman Sachs. But the key thing, Blake, when I look outside of just tech, because everybody, people like to focus on tech. But if you look outside of tech, so big banks broke out. JP Morgan, new highs just yesterday. Goldman Sachs made new highs yesterday. Energy stocks are breaking out. Exxon made new highs yesterday right off the back of the weekend news. But then you've got stocks like GE that are breaking out. So, when I look at these big names in banks, big names in the industrial sector, these are important stocks breaking out to new highs. So it's definitely not, we heard for years it's just 5 stocks, it's just 7 stocks, and it's definitely not that. When you see these names, like Raytheon, it's another big industrial stock that's breaking out to new all-time highs. Caterpillar broke out to new highs. So when you've got, sectors outside of tech breaking out, industrials, financials, that's strong, but also semis are super strong. Semis made new highs yesterday. Now, on the other side of that, though, there is some weakness in software. There's some weakness in big tech. So you look at a stock like Microsoft that, closed below the 200-day moving average a couple days in a row. So for me, the 200-day moving average is like a red light green light, and I don't start new positions below the 200-day. I don't like to really hold stocks below the 200 days. So,
Wait, wait, wait. Larry, can I stop you there?
Yeah.
You just said two things that you tend to be a long only guy. Well, I mean, that's not necessarily true, but just we've been in a bullish market for so long, right? So
yeah, I generally don't short unless the S&P is under the 200-day.
Right. I always remember that, but this is important information for those of you guys that are at home and you're like taking notes. Take notes of what Larry just said. Stock gets below its 200-day moving average, I'm not interested on the long side. S&P gets below the 200-day moving average, I'm not interested in being long stocks in general. I mean, how important the 200-day moving average is to Larry at Blue Chip Daily is really important information that you all should be taking notes with. All right, sorry, Larry, didn't mean to interrupt.
Yeah, no worries whatsoever. But so it's not, we're not green light everywhere, because Oracle was really the first big tech stock, I think, that started to roll over recently. So,
Yeah.
and I got stopped out of this. I had Oracle and I got stopped out of it in the 260 neighborhood or so. But so it's not, there's a lot of bullishness out there on these charts, but big stocks like Oracle, the software stocks, CrowdStrike, which is another big software name, that's trading, right at that 200-day. So I don't know why. I couldn't tell you why software's weak and semis are making new highs. I'm sure, somebody's got some insights there, but all I know is I just pay attention to the fact that, okay, in tech, there's a pretty big part of the tech sector that's been under some pressure. So that's something I want to pay attention to. But there's plenty of stocks and plenty of uptrends. Europe overall has been breaking out. So the Euro Stocks 50, that made a new high yesterday. I've been bullish.
Did you see the DAX and oh man, these markets, the FTSE is taking off. All these European markets are taking off.
Yeah, and if you look at these bank stocks in Europe, so Deutsche Bank, that's right underneath a breakout level, Barclays. So there's a lot of strong charts. So when I see bank stocks breaking out and semiconductors breaking out and industrial stocks breaking out, it does make me feel a little bit more confident in the underpinnings of the market, whereas it's not just, Nvidia that's going up and everything's going down.
Sure. No. Well, let me ask a question here, Larry, because this is kind of an important dynamic that is something that we, as I say we, like I tend to be more currency centric myself personally. So that means I tend to pay attention to like what's happening globally. One of the things that I'm more worried about as a US investor is the outperformance of European or international equities over US equities, where US exceptionalism has been it's been obvious over the last several years, but I think that's shifting. You can actually see it where European equities are breaking into new highs, and the S&P and NASDAQ and Dow are not. So does that factor into anything that you do?
It does to a degree, in that it tells me I need to have some exposure in Europe. I don't really have a lot of exposure in Europe, but when I see, like this is the Europe ETF VGK versus the SPY over the past year, and it looks like over the past year, Europe has doubled the S&P 500. But the key thing is Europe underperformed forever. So you could have some catch up when I go back to VGK. You could have some catch up in these European charts, because for the most part, European stocks are less expensive than US stocks. And if you look at just VGK, so this just broke out, right? But it's trading the same price it was in 2008. It was just trading there in the summer. So VGK, if you take a look at how long this is underperformed for, bigger ranges equal bigger breakouts. So if we take a look at VGK Europe today, it's really just over where it was in 2007. Excuse me. So there's the banks are breaking out. You've got in the UK a lot of these pharmaceutical stocks. You can look at GSK, $100 billion pharmaceutical stock. That's a great trend. So basically, what I do is I focus on the weekly trend, and I run my screeners every day, but the screeners take me wherever the charts are. So if European healthcare is breaking out or European banks, then I want to have some exposure there. If metals and miners, I've got a lot in, gold miners, these metals and miners, XME. This has been a very strong trend that we've been in since July. And this group, aluminum stocks, coal, copper stocks, there's some really big breakouts here. Once they break out, we don't need to know how far that trend can go to know that it's breaking out. If you look at Freeport, if you look at that range, really just trying to come over the top of a range that goes back to 2008. So it's an interesting chart.
Yeah, it sure is. Larry, let me ask you this. Where is your focus right now? I mean, is it still, do you think that the Mag 7, this AI story still has some legs, or are you starting to shift your focus, or are the charts telling us we need to start shifting our focus into different industries, whether you're talking about energy, whether you're talking about consumer cyclicals? I mean, where do you sit right now? Because we are at all-time highs in the S&P, so, or near it. I mean, within a couple points of it. So where's the next trend going to develop in your view?
So longer term, so AI and tech, from a fundamental perspective, it's a very long-term theme. It's going to take a couple of years, longer for this build out to go through. But the stock market doesn't always react in the shorter term, and that could be, 3 to 6 months, whatever it is. Just because AI is a long-term growth story, which it is, doesn't mean that AI stocks are going to outperform. So I want to have, banks, I want to have energy. Over the past few months, I've been adding to bank stocks. I've been adding to energy stocks. Yesterday, I took a position in GE Vernova, and this is in the industrial sector. So it's an AI data center idea. They're in power generation, they're in nuclear, and power is a real, hot button for AI data centers. But if you take a look at this chart, and I'll make it just a little bit easier to see, but you can see this 660 price line. So July to August traded up to 660 and failed. Could not get through in September, could not get through in October. And then finally last month, big breakout. So we cleared that 660 line, pulled back and filled that gap. But right now the stock is just drifting over that 660 level. So, I've not added a lot of tech over the past 2 months or so. So I've got what I consider the core tech stocks, NVIDIA, Palantir, Google, Taiwan Semiconductor, things like that. I've got the real big names. But for new money, I've been going more out of tech than I have been going into tech. So, just in the past few days, I added GE Vernova yesterday. I added a position in Deutsche Bank yesterday. And, so I think you need to have tech. I think you need to have these core names like, NVIDIA. But I also think for new money, I would definitely be going outside of tech.
Okay. All right. Well, that makes a lot of sense. So let me ask you a little bit about the Venezuelan situation. Not about Venezuela per se, but how it's going to affect the energy sector. And we obviously saw the energy ETF take off yesterday. And you had mentioned ExxonMobil. I'm sure everybody's itching to get in there. How's this?
Yeah.
Have you been looking at the energy sector, and are you going to be adding some longs as a result of what happened this weekend?
Yeah, so I started to buy into the energy sector maybe 6 weeks ago. So I've got a position in OIH, and I think off the top of my head, I've had this for maybe 8 weeks or so. So it went higher, it pulled back, big breakout. I've had a position in Valero for about 8 weeks or so that I think I'm down. Well, I might be up now, but I bought it, started to break out, it pulled back, so I've got a position there. And then I've had Exxon, I think, for 8 weeks as well. So I've got three energy positions, but what I see in energy is I think that you've got a longer term sector breakout that's underway. So when you take a look at a stock like ExxonMobil, and I've posted this chart on Twitter a few times, but if you take a look at XOM, it really failed versus 120 for about 3 years. So 2022, 23, 24, 25, you can see that 120 level, it just continued to fail every time. But now we've got a full breakout over 125. And you see, for me, this is a perfect chart. So if you said to me, Larry, what is your favorite type of a chart? This Exxon chart is my favorite type of a chart.
Because of
It traded in a range for 3 years, and the
yeah,
market, every time it would get to 120, the market would sell it off. But
right.
now it blew right through 120. We're sitting right near new all-time highs. So you've got a 3-year range consolidation where bulls could not break this stock out. Now they broke it out. And historically, the bigger the base, the more significant the breakout is once that base breaks out. And I saw a stat yesterday. It was on Bloomberg. I was doing a couple things at once, but I heard someone say that Brent crude oil shorts were at a 10-year high. So I can't confirm that. I don't really follow the energy futures market, but there was an energy analyst on TV that said that short interest in Brent crude was at a 10-year high. So if that's correct, then that tells me, you've got Exxon breaking out, right? But
Yeah.
you've got crude oil near the lows. So if Exxon can break out with crude oil near the lows, it doesn't take a lot if there's any type of a bounce in crude. And I have no prediction for crude. I don't trade crude. I'm not, well versed on the market whatsoever. But when I look at the chart, I can see that 55 on WTI looks like a longer term support level. So if Exxon's breaking out with WTI near longer term lows, if this turns up for whatever reason, and I'm not saying that it will, but if short interest is at a 10-year high, then that's something I want to pay attention to.
Oh, that's great, Larry. Well, I love how you put it all together for us. And I'm sure you do that at Blue Chip Daily every day. So why don't you, unless you have anything else that you wanted to bring to our attention, why don't you tell us a little bit about what you do over at Blue Chip Daily?
Yeah, no, so I appreciate that. And I think we've pretty much covered everything, spread the ideas across the board to what's breaking out. Metals have been very strong. And
Yeah.
as long as these charts keep breaking out, then I want to continue to stay long. If I've had positions from lower, so I've had Newmont for a while now. So what I'll do, I think my Newmont position, and this is on the member side, I think it's up 40 or 50% since the buy. But what I'll do along the way is I will book some gains along the way, but I'll hold the core positions. So if it keeps trending higher, I don't want to be greedy and not take anything off the table because you do have to hit the cash register. But for the most part, as long as these charts look like this, I want to continue to stay long. And then, yeah, if people want to find me, the easiest way on Twitter, or I guess we call it X now, is at Blue Chip Daily. So I post for free. I post ideas every single day. You can follow me there. Website is also bluechipdaily.com. I post daily best ideas. I share what I'm doing in my account. And then also I post ideas because not everyone, wants to follow me. Not everyone has my time frame. If we've got a member that starts with us in June, they're not going to be able to go back in January and buy what I bought in January. So I post fresh ideas every single day. We've got, monthly memberships, annual memberships, and, you can cancel at any time. But yeah, we've had a lot of nice performers over the past few years.
Awesome, Larry. Well, I tell you, you and I have known each other now for several years, and I always enjoy speaking with you. And I want to thank you for taking your time out of your day to spend it with the F.A.C.E community.
Blake, thank you so much for having me on. I appreciate everyone's time, and I hope everyone has a great 2026.
Yeah, you too, Larry. And I'll be reaching out to you very soon, within the next couple of weeks, to reschedule you back on the show.
Perfect. All right, my friend.
All right, buddy. Have a great one. Happy New Year.
Thank you, Blake. You too.
All right, and everybody, thanks for listening in today. I appreciate it. And although I've been absent the last couple of days because I'm helping our friends over at Ninja Trader Live, just with their morning shows. They have some people out at the beginning of the year. I'll be back on F.A.C.E every day next week, minus my Friday absences, but throughout the course of the week. So I appreciate you guys, being great with Ryan and K-Man and Steve. And I know we're going to have Greg Horvat, and we're going to have other people from our team joining in. So you guys have a great trading day. For the rest of you that are part of the Forex Analytics community, I'll see you on the Morning Edge in approximately 14 minutes. All right, have a great day. Good luck, everyone. Tomorrow's going to be a big day, by the way. All right, see you.